Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Q Report, the weekly DIA, IWM, and Bitcoin report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.
Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly IWM report. That is the Russell 2000 ETF for the week of Monday, February 28th, 2022. Before we look at the charts, I just want to remind you again, you just saw that little commercial if you watched it. Just to remind you that this is really the last free week for the weekly IWM report, the Russell 2000. If you've been watching on a week-by-week basis, it does fold into a paid subscribership starting next week. It will be part of a base package that include the weekly DIA, Dow Jones Industrial Average, the weekly Bitcoin report, and all of our stock picks, typically 3 a week. One goes free out to YouTube. The other 2 are part of the premium membership and have been for the last year and a half. And so you'll get all the stock picks and the 3 weekly videos for $25 a month. If you wanted to include the weekly IWM report with, say, the Daily SPY, then it bumps up to $40 a month. And if you wanted everything, which will include then also the Daily Triple Q report, it's $50 a month. And we're offering half off your first month. There is a coupon code. You just type in I think it's all caps. I'm not sure if that's necessary or not, but just one word, half off, HALFOFF, and that'll give you half off your first month. So I hope you come on board and become a regular paid subscriber to wickedstocks.com. We will continue offering relevant, valuable, insightful analysis on our YouTube station. So keep that in mind, our YouTube channel, the Wicked Stocks YouTube channel. I'll be doing some NASDAQ 100, S&P 500 underlying indexes, crude oil, gold, inflationary barometer, so forth and so on. So keep watching YouTube if you don't become a subscriber, but just know that the letters that you've been accustomed to watching are going to fold into what I think is a reasonably priced subscription package. So let's take a look at the chart. This is the Russell 2000, the IWM, weekly bar charts throughout. This is a chart that goes back to 2007. If you've been watching the IWM, you know we had a sell signal several months ago, a couple of months ago, that then indicated the 192.89 long-term channel top, former long-term channel top. That was a breakout, excuse me, a breakout buy signal over a year ago when we closed above it. And now we've fallen back to it. And yes, we have slipped below it on an intra-week basis, but we've not yet closed below it. Last week's low was 187 and change. I forget exactly. The low 4 weeks earlier roughly was 188.09. So we did put out a new move low last week, and we closed higher on the week itself. And that's a favorable development in terms of at least stabilization. And the fact that we're testing long-term support at 192.89 is cause to consider the possibility that maybe we are forging here a long-term low that could last through the year. But I also have been mentioning, and I know you're aware of this if you've been watching, that there's another technical study that does, I don't want to use the word suggest, but at least allows for outright bearish continuation into the very low 170s, upper 160s. I don't know if this area is going to be tested. I will say that if we do close this week below that 192.89 long-term channel top, that yes, that would be indicated, and probably in several weeks, maybe quicker. It could be just a 1 week sort of a bloodletting, if you will, down into the low 170s. That you've got all kinds of stuff going on there. If you look at the old congestive framework that lasted for about a year, the top of which is 244.46, the bottom is roughly 207.21. If you flip that on its tail, so to speak, to the downside, a full extension of that is 169.96. AB, the 2020 COVID low against the more recent high, that's B, 50% down is 170.08, and then you have the former high from 2018 that held for a couple of years at 173.39. So if given the opportunity to buy that area, I think it's pretty golden. I don't know if we're going to get there or not. In fact, you could say that 192.89 former channel top is golden in its long-term support. So let's take a look at the upside for the week. You've got the 192.89 long-term channel top that I have represented here as a horizontal line. This is really more for reference. You can see that we closed higher on the week following a new move low. That's considered what I call a mini reversal low. In other words, a stabilizing event, possible follow through to the upside. Although I don't have a clear signal for upside continuation just yet. If you've been watching the weekly IWM, the last few weeks I've had this descending channel top at 202.77. I no longer consider that my sort of confident breakout resistance to the upside, my upside pivot point, let's say, into the second quarter. It is a tradable level. So if you trade the IWM, that is a meaningful resistance area for the week only. I don't consider it able necessarily to contain buying, say, through March trade, and from there we can continue to fall off. But I do think it's a level that you can trade. But if you're buying the IWM, I say you're too, if you haven't bought it yet, so hold the phone and I'll show that in a moment. But if you're buying at 192.89, this long-term support area, you're going to have a sigh of relief, or you can buy more if we can close above 208.92. I think this is our breakout resistance. It's just a simple horizontal channel structure. There's a sort of a rule of thumb with line studies. I don't know why I say lime sometimes, but with line studies, the steeper they are, the less reliable. And this is true. I mean, if you've got a super steep descending line, it's less reliable than a softer pitch. And 208.92, I think, is a pretty classic buy signal if settled above. It's also an area that can contain weekly buying pressures. And from there, we can fall back into the low 190s again, 192.89 within a week or two at the most of that. 208.92 also lines up pretty well. I've cast it all the way to the left side of the chart. It's just a horizontal line, and you can see how it sort of coincides with a series of lows that went on for months. So 208.92, our breakout resistance. If we close above 208.92, if you've been buying the low 190s, sigh of relief. We should then see the 230s over the next few months. 237.95, I think, then becomes a realistic, 2 to 3 month target. Along the way, you've got that former channel bottom at 218.25 that is fully able to contain weekly buying pressures. We could close above that 208.92 channel top and rally up to 218.25 the following week, and then back off again to the 208.92 channel top. But it is the 208.92 channel top that I think at that point in time would be sort of the aggressive buy zone. 218.25 is kind of a hesitation point on the way up that, yes, can contain weekly buying pressures, but then closing above 218.25, there's very little to keep this market from rallying over the following 3 to 5 weeks or so to that 237.95 descending channel top, which represents kind of a midterm resistance area that, if tested, let's say at some point in April, I don't know, could contain Q2 highs, which would take us all the way through June, perhaps. We could fall off from there. We could get trapped, if you will, once again back into that consolidated framework that went on for the better part of a year between roughly 208.92 and this 237.95 channel top. You can also see how that 207.21 area lines up with 208.92. So this is sort of the flip side. If you're really bearish the IWM, if you're short the IWM, if you've bought out of the money puts in the 170 puts in the IWM, you can make a case for that 207.21 to 208.92 area that we could test it, fall back, and then perhaps close below that 192.89 long-term channel top. But it's a battle right now. It's very difficult for me to say which way is she going as we continue through Q2. I like to let the market tip its hand. And so the market would tip its hand to the upside if we close this week above 208.92. I don't think there's anything else to do but be long IWM if we close above 208.92. There's also a case to be made that you should be bottom picking the low 190s. So I'll just leave that up to you. If we close below 192.89, once again, we should fall into the upper 160s, low 170s over the next few weeks, where what I would anticipate an annual low. I think that's about all of the downside we might expect. If we take that area out, it looks pretty darn ugly for the IWM as we continue into later year. And I'm not even going to go there right now because I'm not anticipating it. But I will go there as we approach, if we approach the lower 170s in the coming weeks. You will know that if we close below 169.96, what my next big picture target would be. So sign up for that premium membership, $25 a month, half off, $12.50 for this month to continue receiving not only the IWM, but DIA, Bitcoin, and all of our stock picks. I appreciate your support, and I hope to see you come on board, wickedstocks.com. You have a great week.